Welcome back to Explain the Charts, your ultimate destination for granular market insights that blend real-time news with critical price action. Today, we're dissecting Microsoft, identified by its ticker Microsoft, a true behemoth in the tech sector that has just unleashed a torrent of financial news. It's August 1st, 2025, and MSFT's latest performance has propelled it into an extraordinary league, setting the stage for some fascinating chart dynamics that demand our attention. We'll explore the immediate impact of these revelations on the stock, correlating fundamental news with raw chart data across daily, hourly, and 15-minute timeframes. Kicking off with the monumental news, Microsoft is now on the precipice of a staggering $4 trillion market capitalization, a truly rarefied stratosphere it's entering, alongside fellow tech giant NVIDIA. This historic milestone is a direct consequence of their phenomenal fiscal fourth quarter results, which simply blew past all analyst predictions across the board. The company reported an impressive $3.65 in earnings per share, significantly exceeding the $3.35 consensus, and total revenue soared to $76.44 billion, marking an 18% year-over-year growth. The driving force behind these exceptional numbers is Microsoft's relentless momentum in AI-driven services and the continued, unparalleled expansion of its Azure cloud platform. Their intelligent cloud segment alone witnessed a remarkable 26% revenue increase, reaching nearly $30 billion, with Azure contributing over $75 billion to the company's top line in the past fiscal year. Looking ahead, Microsoft is doubling down on its strategic investments, allocating over $30 billion in capital expenditure for the next quarter to aggressively scale its AI infrastructure, signaling strong future growth intentions. This overwhelmingly positive financial backdrop has naturally triggered a wave of analyst upgrades and heightened price targets, with firms like Piper Sandler now projecting $650 and Wedbush seeing potential up to $625. However, it's crucial to acknowledge the one discernible cloud on the horizon. The UK's competition regulator has expressed growing concerns about Microsoft and Amazon's competitive impact within the burgeoning cloud computing industry. As of Friday morning, Microsoft was trading around $531.38 after opening at $533.50, and its market capitalization currently stands at $3.97 trillion. To definitively maintain that coveted $4 trillion status, market analysts highlight that Microsoft needs to close at or above the $538.13 threshold. Now, let's pivot to the charts and see how this news translates into price action. On the one-day time frame for Microsoft, the long-term trend is unequivocally bullish, defined by a consistent pattern of higher highs and higher lows. This sustained upward momentum, observable throughout the past year, indicates strong underlying demand and continuous investor accumulation. Zooming into the spring of 2025, specifically around early April, we can identify robust support forming near the $350 level, almost precisely at the stock's 52-week low of $344.79. This area, marked by a significant rebound candle, represents a formidable psychological and technical floor for the stock, proving its resilience during pullbacks. The dramatic rally in late July culminated in Microsoft achieving a new all-time high of $555.45 on July 31st, a direct reflection of the market's enthusiasm for the earnings report. Yet, the daily candle for July 31st itself paints a more nuanced picture. Despite the initial surge, it finished significantly lower at $533.50, forming a large red body that strongly suggests profit-taking. This price action establishes a formidable short-term resistance zone between $555 and $556, indicating selling pressure at these peak levels. Despite this immediate pullback, the current price of $531.38 remains comfortably positioned above both the 50-day simple moving average at $488.46 and the 200-day simple moving average at $434.13. These key moving averages consistently provide dynamic support, reinforcing the robust long-term bullish outlook for Microsoft. Shifting to the 1-hour chart, we can examine the granular details of the price movement surrounding the earnings announcement, specifically focusing on the period from July 30th, 1947 Universal Time Coordinated to July 31st, 4 o'clock Universal Time Coordinated. The candle commencing at July 30th, 2002 Universal Time Coordinated is extraordinarily impactful. It shows an immense bullish engulfing move, rocketing the price from approximately $514.10 to a high of $551 within that single hour. This explosive surge unequivocally confirms the market's immediate and potent reaction to the exceptional fiscal results, demonstrating how swiftly conviction can build. Momentum carried into the subsequent 15-minute intervals, with the price briefly touching an all-time high of $555.86, confirming the apex of this initial euphoria. However, a crucial observation is the subsequent series of red hourly candles on both July 30th and throughout July 31st, signaling a clear pattern of retracement and consolidation. This suggests that aggressive profit-taking commenced almost immediately after the new highs were established, as some investors capitalized on the sudden spike. The $550 to $556 range is now clearly defined as a robust short-term resistance, where sellers are actively defending higher price points. Immediate short-term support for Microsoft has formed around the $530 to $535 area. This zone is currently being tested and actively defended by buyers. Should this $530 to $535 support level break decisively, the next significant technical support would likely be found near the $510 to $515 band, a critical area that acted as strong resistance prior to the earnings breakout. For the ultimate intraday perspective, let's zoom in further to the 15-minute chart, pinpointing the intense volatility from July 30th, 1947 Universal Time Coordinated to July 30th, 2047 Universal Time Coordinated. Here, we see the immediate response of the market to the earnings news, characterized by the colossal green candle at 2002 Universal Time Coordinated, showcasing extreme buying pressure. This chart precisely illustrates the classic buy the rumor, sell the news phenomenon, or at least very rapid profit distribution, as the stock quickly touched and then recoiled from its peak. The sharp rejection from the absolute high near $555.86 within minutes of reaching it is a clear signal of aggressive selling by high-frequency traders and early entrants. The subsequent red candles on this time frame, despite the overwhelmingly positive news, underscore the importance of price action over pure sentiment in very short time frames. High transaction volumes during these 15-minute periods confirm significant institutional participation and fierce competition between buyers and sellers. So, having meticulously reviewed both the fundamental news and the unfolding price action, what does this imply for MSFT's future? From a long-term perspective, the bullish argument for Microsoft remains profoundly compelling. Its foundational strength, dominant position in high-growth areas like AI and cloud computing, and strategic investments signal sustained expansion. The company's robust financial health and diversified product portfolio provide an exceptional buffer against broader market fluctuations, solidifying its appeal as a cornerstone long-term growth investment. Conversely, short-term bearish arguments are primarily technically driven. The sharp rejection from all-time highs and the large bearish daily candle on July 31st suggest immediate selling pressure and a potential exhaustion of buying momentum. The regulatory scrutiny from the UK, while a long-term concern, introduces an element of uncertainty that could periodically weigh on investor sentiment if developments escalate unfavorably. For agile traders, precise timing and careful observation of key levels are paramount. The critical overhead resistance is undoubtedly the fresh all-time high at $555.45. A decisive breakout above this level, ideally supported by robust volume, would serve as a powerful signal for a renewed bullish leg and potential price discovery into new territories. On the downside, the immediate and crucial support zone to watch is the $530 to $535 area. A successful defense of this level would indicate that the current pullback is merely a healthy consolidation within an uptrend. However, a sustained break below $530, especially with increased selling volume, could open the door for a deeper correction towards the $510 to $515 range, or even the significant 50-day SMA at $488.46. For those looking to initiate long positions, patiently waiting for a clear bullish reversal pattern on one of these established support levels, coupled with increasing by volume, would offer a higher probability entry. Conversely, short-term traders eyeing bearish opportunities should look for a confirmed breakdown below $530, or clear rejections from the $555 resistance, ideally accompanied by bearish engulfing candles on shorter time frames. Remember to always implement stringent risk management protocols, including appropriate stop losses, as unforeseen market shifts or news events can swiftly alter technical setups. Continuously monitor broader tech sector performance, as well as any fresh updates regarding the UK regulatory inquiry and Microsoft's ongoing AI developments, as these external factors will heavily influence MSFT's price direction. To concisely recap our in-depth analysis, Microsoft is positioned at a fascinating inflection point following its explosive earnings-fueled rally. The most important price levels to monitor vigilantly include the all-time high resistance at $555.45, the immediate crucial support zone of $530 to $535, and the robust foundational supports at the psychological $500 mark, the 50-day SMA at $488.46, and the enduring 200-day SMA at $434.13. Regarding the probabilities of future movements, a sustained breakout above $555.45 has a moderate likelihood, 60%. If the broader market sentiment remains overwhelmingly positive and no substantial negative regulatory developments emerge to dampen enthusiasm. Conversely, a continuation of the current retracement towards the $510 to $515 range is also moderately likely, 55%. If the profit-taking pressure intensifies or if general market weakness begins to manifest more broadly. A deeper correction, potentially testing the 50-day SMA at $488.46, is a less immediate but certainly plausible scenario, 40%. If a broader tech sector pullback or unexpected macroeconomic news triggers a wider sell-off. Always cross-reference price action with confirming volume trends during any significant breakouts or breakdowns to validate the move. Finally, keep a very close eye on any future announcements regarding the UK competition regulator, as this could introduce significant, albeit longer-term, volatility into the stock. Additionally, ongoing updates on Microsoft's pioneering advancements in artificial intelligence and cloud computing will be paramount indicators of its continued long-term growth and ultimately, its stock performance. Mastering these complex dynamics and being prepared for both ascending and descending price scenarios will be absolutely critical for intelligently navigating MSFT's path forward.